We're in week 2 already, the second week of reviewing financial accounting. I found a problem from an old version of your financial accounting book and thought it might be a good review of some of the concepts, especially the concepts that we'll need going into managerial accounting. The first one is making an income statement. In week 1, you looked at some financial statements in the videos, if you watched the supplemental videos, but they were about a sole proprietorship that did a service. So here we're looking at the 10-column worksheet for a merchandising business. I almost said manufacturing. So a merchandising business has a product that they sell and make a profit on. And you can see from the worksheet for the year of 2000, whatever. You can call it 2023, you can call it 2013, whatever. It's just trying to show you that it's the year 3 in case they give you numbers from the year 2 or year 4 that you understand where these numbers fit in the context of the sequence. So it says that before any adjustments were made in the trial balance, the company had $22,300 worth of merchandise. Some adjustments were done to remove the old balance of merchandise and replace it with the new balance, which shows up here in the adjusted trial balance, $24,600. And that's what carries over to the final balance sheet columns. In moving the old and the new inventory amounts around, the old is dropped into income summary and the new is used from income summary to drop into merchandise inventory. Why do we do all that? So that we have beginning and ending merchandise in order to make the financial statements that we need, which is a multi-step income statement for a merchandising business. You will need all the numbers in the income statement column for the income statement. I know that seems like a huge surprise, but just like any other income statement, you'll want to begin with revenue. For a merchandising business, they call their revenue account sales. And they often have things that are contra revenue accounts. Sales discounts, sales returns, and allowances are common contra revenue accounts, which means they are subtractions away from the revenue. So this is telling us that $130,500 worth of merchandise was sold. That's the price we charge the customer for the items that we sold to them. But $900 of them came back as returns. So we really technically can't tell our reader we sold $130,500 in sales because 900 of it came right back to us. So we're going to net those two against each other on the first 2 lines of the income statement. And then from there, we're going to try to determine if the company made a gross profit. And to do that, we need to know what it cost us for the same items that we just sold. So we're trying to determine cost of goods sold. So the income statement will have the next few lines that deal with cost of goods sold. Cost of goods sold is going to involve beginning and ending merchandise inventory and purchases and work all those out to find cost of goods sold. So net sales minus cost of goods sold gives us gross profit, and then we take away all our expenses. And finally, we get how much profit the company made, or their net income. The bottom of the worksheet has net income on it. So you'll have a good double check for yourself that if you get your income statement done and you show a net income of $21,350, you've got the right amount. Then you're going to make the statement of owner's equity. We're still dealing with a sole proprietor. So watching the financial statement videos from last week in the supplemental area will help with that. Examples that you can find. But it's pretty much telling the owner, you had this as your beginning capital, $75,800. You brought in some profit by operating your business so efficiently. But as you know, you took home a withdrawal of $21,000. So your final ending owner's equity is, and that's what you calculate for them. That's pretty much the whole statement. Beginning owner's equity plus any good stuff that happened, minus any bad things. If you want to look at it, a withdrawal as a bad thing. It's something that hurts the equity, but the owner took it home, so it was a good thing for his or her personal life. Then the balance sheet is all the assets, liabilities, and the new updated capital. Combination of a lot of things going into, but the balance sheet columns will pretty much guide you through making the balance sheet. So let's take a couple minutes to take a look at some examples of the financial statements you'll be making. I found us a recording or a picture of a multi-step income statement. It's at a website called principlesofaccounting.com. I'm going to put a link to it in Moodle, so don't worry about trying to copy down the URL right at this moment. But this will give you an idea of the income statement I'm looking for. This company may or may not have more expenses and line items than you're going to need in yours, or you might have a couple more than they've got. But in general, this is the format. Since we're dealing with a sole proprietorship, we will not have taxes. So ours will end, instead of income before tax, because we don't have any tax, it'll just be net income on the bottom here. So you can skip the income tax expense line. This should give you a good format to follow. It's going to be important that you understand how this cost of goods sold section works, because as we get into next week, getting into our managerial book, we're going to be looking at computing cost of goods sold for a company that manufactures its products. We're still going to have a beginning inventory of products available to sell, but instead of purchasing, we're going to make them. So I'll be adding in all the products that we made and then minusing out the ones that didn't sell yet to figure out the cost of the ones that did sell. And that will help us determine gross profit. So I'm spending a little time in this week focusing on this because it is going to come into play next week. I'll put up some links to a balance sheet and a statement of owner's equity, but the statement of owner's equity also have been mentioned up in the videos in Unit 1 that talked about financial statements for a sole proprietorship, because those won't change at all. So you'll have examples and you'll have a video on those. Let me know if you have trouble. Hopefully this stuff is starting to come back into the memory banks. Like I said, some things are going to come into play next chapter and in the future in managerial. You're still going to want to understand debits and credits and journal entries and the basics about financial statements. We won't be looking at things like stock, bonds, all the different depreciation methods. We're going to touch on depreciation, but we're not going to go as in depth, or things like uncollectible accounts receivable. Those are pretty much financial accounting concepts. But having inventory and making a profit and generating financial statements are still going to come into play.